with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now today, we have an interesting lineup of segments for you all to give you all as much information as quickly as possible. Now today is the first day of September OPEX. Yes, OPEX, if you don't know, is options expiration. It's monthly contracts as they go on and on and on and on. Last Friday, we saw August's OPEX end. Now we're in September's OPEX. This is how I personally like to look at markets from month to month, using OPEX as your new month. So this is a new month for me, the way I like to look at things as an options trader. So we're going to see a few things today. I'm going to highlight a few things. I'm going to highlight my near term and medium term. So basically what we're looking at between now and the next few weeks, and then now and the end of the year, price targets mainly for the SPY, and what we're seeing right now as both your risk on and risk off potentials and things to consider for you and your portfolios. That's very important. Make sure you stay tuned to that later today. As usual, we're going to go through our catalyst watch for the day to see what we have coming down the pike today. And today, a little boring in the beginning of the day, but later on in the day, we do have European leaders arriving to the White House around noon, or at least scheduled to arrive around noon. Trump's meeting with Zelensky at 1, so there could be something said there, obviously, or if there's a press conference afterwards. And then Trump is also meeting with the other European leaders, as I alluded to previously, at 2:30. And then officially the meeting's scheduled for 3. So basically, we could see a bit of, I want to say volatility, questionable things to occur later on in the second half of today. Beginning of the day should be pretty quiet. However, again, it's a new OPEX, new start of a new month. So we'll see how open shakes out. As I tell you guys, as per usual on a Monday, I like to let things kind of cool off. I give it the first 10-15 minutes, see where we're sitting on the market before I make any rash moves, unless something is like a pristine setup. As we're looking at the market right now, in the pre-market, pretty flat. SPY's a little red, Q's are a little red, IWM's a little green, so we're not really seeing too much of a decision or anything major happening. Pre-market before the open here. So I'm not looking at this as a Monday I want to dive into head first right away. Let's look forward to the rest of our week, kind of get an idea of anything else is on our radar here as a concern from a risk standpoint for the rest of the week. You do have Bowman speaking tomorrow at 2:10, but other than that, tomorrow looks like it's going to be pretty calm. You do have some housing data tomorrow, so if you're exposed to materials or obviously real estate, maybe keep an eye on that. I know not many people are, but I know some of you are, obviously. Looking to Wednesday, we have the 30-year mortgage rate, so another home thing. So I guess looking at just the first 2 days here, if you're involved in builders, materials, and real estate, tomorrow and Wednesday could be very important for you, again, depending on how you're exposed. That 30-year mortgage rate is Wednesday morning pre-market. What I do want to highlight here is we do have Target and Walmart's earnings this week. We're going to talk about that when we get a little bit more into the show. I want to wait until everyone piles in here. But that's actually going to give us, or potentially give us, more of an inkling on where we could be going here near term. So we'll circle back to that. We do have FOMC meeting minutes on Wednesday. The meeting minutes don't tend to affect as much as obviously a rate decision and the press conference, what Powell says afterwards. Typically when the minutes come out, it's already what's known to the market. It's already what's known to you and me. Sometimes there's a nugget of information in there that may have been missed, may not have been talked about, whatever. But typically, at least in my experience, we don't see a lot coming out of FOMC minutes specifically. So that should just really be a recap. You do also have the 20-year bond, and again, some Fed speakers on Wednesday. Fast forwarding to Thursday, and again, we're only focusing on the U.S. market here. We're not looking at anything European or anything. Wednesday, we have Target earnings. Thursday, we have Walmart earnings pre-market. Jackson Hole. Who remembers Jackson Hole maybe a year ago? Well, the symposium is back on Thursday morning pre-market at 8 o'clock. That's going to be kind of an all-day thing, so you're going to want to keep an eye on that, as well as jobless claims. So it's kind of like a double whammy there on Thursday. So you're going to want to watch that. You also have PMI as well, and existing home sales. So really a busy week if you're in the mortgage, real estate area section of the market. Pretty busy week in terms of news events that could affect your investment from that point of view. Rounding on the week, on Friday, you do have the Jackson Hole Symposium continuing on Friday, and that's when Powell's actually going to make his keynote speech on Friday. That is currently scheduled for 10 o'clock. Outside of that, there's nothing else for the rest of the day you really have to worry about on Friday. So pretty questionable week in terms of data. We don't really have any, unless, again, you're involved in real estate or builders, we don't really have any strong financial data or any like major, I want to say like consumer data, market data. But we do have Target and Walmart earnings, which we'll talk about here in a little bit. That's a big catalyst that I'm looking at for the market this week, which I don't think a lot of people are. So we'll get into that in a little bit. Good morning, Negum. Thanks for popping by the show. And guys, if you haven't already, do me a quick favor. It's 9:24. I've got a few less viewers than we normally have, so do me a favor. If you're liking the content, you want to share it out for me, I ask you twice a stream. Please interact with the stream. Drop a like, drop a comment, say hi in the chat like Negum just did. I'll say hi back most likely, as long as I see it and you're not saying anything appropriate. I'll say hi back. If you haven't already, drop me a follow. And don't forget to go subscribe over on YouTube. Once we get to 500 subscribers, this will be a daily show. So if you like the content here and you want to see more, pop over to YouTube and drop a subscription. Thank you, and I'll only say that one more time during the show, I promise. Looking at the market right now, we're pretty flat. I do want to recount what we saw in terms of price action. Let's go to 1 hour candles. Wednesday, Thursday, and Friday. I was live on the show, and we talked about this area here, 644.15 and 643.70. And we talked about how that area was a very big flux point, basically either way. Good morning, William. Thanks for stopping by. Also live on X, so he says hi from X, so hey. We talked about how important the 644.15 area is and the 643.70, at least near term. I've now actually made these key LOIs on my chart here because we can see, and you go back on your chart if you don't believe me, and I'm using the 1 hour just to give us a little bit of a elongated point of view, so we could see all 3 days here. Basically starting from, I mean, you could really go back to here and use the pre-market here, but basically starting from the 13th, we saw how important that level was. We saw it again, and then on Friday, we saw it again where the bears couldn't necessarily break it down. I was actually short basically this whole move down on SPY, and I closed out down here around the 642.84 area. I flip-flopped a few times, but I was overall bearish on Friday, and closed out when we saw that the bears weren't really sinking this area. Now this is an important area we want to keep a watch on, especially into market open today. It's looking like we might get a back test of here, and if we get a back test of this area and a rejection, let me rephrase that. If we see a back test of this area, I would anticipate a rejection unless it breaks through with high volume. So watch this area very closely. The 643.70 and the 644.15 is going to be a very key area on the day today. Looking over to the Qs, it's basically moving in line with the SPY, all things considered. Looking at the daily chart here. I want to remind you guys that we do have NVIDIA's earnings coming up on not this upcoming Wednesday, the following Wednesday. That will be a big catalyst driver, obviously for the Qs and obviously for SPY as well. So you're going to want to keep that in the back of your head as you trade this week, or at least if you're trading like monthly contracts, keep an eye on that. I also want to highlight IWM. IWM made this big move here. We're going to talk about this a bit more when I get into my near-term, medium-term outlook. But theoretically, if IWM can get a clean break over this 229.42, it's got about $10 of movement here. And we saw an attempt break there, and now basically a back test of the 8 EMA gearing up where it might go again. I'm actually going to tell you why I don't like that. And I'm going to tell you why I don't want IWM to pop to this level yet. And that'll come later on in the show, so make sure you stick around for that. Look at pre-market at NVIDIA. I highlighted this level, and I was also short NVIDIA on Friday for the same reason. I highlighted this level to you guys during one of the shows, this 183.30 level. NVIDIA has a really hard time over this right now, so this could be your near-term resistance. As I've been saying on the program, I would prefer, and if you're long bull on NVIDIA, you probably should also prefer a cool off into earnings before earnings, because as NVIDIA climbs up higher before earnings, it's going to set those expectations even higher, right? The evaluation's already high. So if the evaluation gets higher, even if they blow their earnings out of the water, I used this example this morning in our Discord community. I said, let's say the expectation's 10 and NVIDIA pulls 15, right? Because the evaluation's so high in NVIDIA, the market says, cool, you beat it by 50% or whatever, but we wanted you to beat it by 100, right? We wanted 20, not 15. So that's something you got to keep in the back of your head when you're looking at high growth opportunity companies, and also the biggest company in the world right now, where the expectation, the bar is being set higher and higher and higher. Their last earnings, let me remind you, we're down here. We're trading around 135. So we had an appreciation of roughly $50 on NVIDIA since their last earnings. That's a big appreciation. Will the data from that earnings back up that new appreciation in value? Will the growth be that much more fantastical? And that's something I'm concerned about. So we'll get into that in a little bit as well. Meta is right at that 7. I mentioned this level before, 775 area, 777 area, easy area to remember. At pre-market here right now at 775. Microsoft isn't looking the best, but we'll come back to that after market open. Google, again, if you're wanted long the Mag 7, this is going to be your strong horse, your lead horse. It's what you want to keep an eye on for strength in general in big tech, in my opinion. We'll talk about Apple in a little bit as well. Tesla failing that 3. Again, I said as long as it's under 360, I'm personally bearish on Tesla, and the opportunity to long is all the way down here. Otherwise, I'm not really day trading this. And quickly, Amazon. It's a little questionable here both ways, to be honest with you. But now the market's open, so we'll zoom back to the SPY and see what we get here at market open. Literally opening on that 642.84 LOI. Again, I want to see a back test of this area that we saw, the 643.70, 644.15, and see how volume reacts up here. You could, if you wanted to take a ballsy long here, you could take a long. It's 9:30 though on a Monday, and I'm going to guess IV is going to be very high, especially for a new OPEX month. Actually, no. IV is actually a little bit under IV percentile. IV percentile right now is at 1736. Current IV on 0-day contracts is around 15. So IV is actually a little bit lower. I'm sorry, your IV percentile is 44%. IV is, or your IV, implied IV, it should be around 1736 across all chains. So all things considered, at the money IV is a little cool for a Monday open. So that's interesting to see. We'll see if the market anticipates volatility as we enter this area. So I'm going to want to watch and see if we enter that area on SPY, if the 0-day IV actually goes up as we approach that area, and how it reacts if we get in this area, and how price action reacts, and how volume reacts if we get into this area. Like I said before the market even opened, I'm not really interested in playing a Monday open, especially a Monday open on a new OPEX. I'm just going to take it slow. We'll give it about 15 minutes, 10, 15 minutes, see how the market moves, and kind of go from there. We do have, as I went over all the news catalysts for the week, I don't want to say a news heavy week, but I almost want to say a randomness heavy week, where we have a lot of things that are going on this week that are hard to predict. Trump speaking and Powell speaking being those two things. Obviously, when we have data, PPI, CPI, whatever, everyone says, if this number, then this happens, right? So at least there's more finality to when you get a bit of data and a number, you can think something to it. But when you have someone scheduled to speak, we don't know what's going to be said. So that gives the market, at least in my opinion, from what I've seen, a little bit more, I don't want to even say nervousness because that's not the right word, but a little bit more carefulness. And as I like to tell you guys, it's not necessarily that the market is bearish or bullish. It's more so that the market is risk on versus risk off, especially with your first 2 days. So this is a little trick that I like to share, and it's not rocket science either. The first 2 days of a new OPEX, so today and tomorrow, how the market performs can give you a good inkling on how the month forward will look, essentially. You have a lot of repositioning that happens on the close of an OPEX and on the open of an OPEX. It's not uncommon. So seeing the market, how it performs today, and I like to give it till the next day, because I like to think that there's a lot of movement within the first 2 days to prepare for the month, theoretically, right? So as we move today, as the price action moves, as the volume, where the volume comes in on the day, should give you a little bit of an inkling on which way the market will shift during the month. And as the market tends to be more bullish than bearish, you can go back and fact check me. Whenever we see a new OPEX start, we tend to have a green day because the market tends to float up, right? Or a inconsequential day where it's not necessarily green or bullish or bearish, but it's kind of like a doji candle, whatever, indecision, I should say. It's not that common that we see, especially 2 in a row, red days on the start of an OPEX. So if we do go red and we stay red today, and we do go red and stay red tomorrow, that would actually support my thesis for going forward into September, which I've talked about on here. I've made a video. If you haven't seen it, go check out my channel. It's a video about the stock market falling, which we're at all-time highs, so it seems insane for me to say. But the way things are lining up, again, there is a once in a 2 to 5 year buying opportunity that if we actually see a correction here on the SPY near term, and we're talking about a normal correction, so 10% move down, which would actually put me right into the buying range that I discussed, somewhere between a 570 and a 610-ish area, and that's a wide range, I know. But if we had a full correction of about 10%, that would be in that area. So I'm actually forecasting a correction here near term. And when I say near term, I mean between now and end of September. However, that can change day by day. We could get new news coming out. They could revise CPI and PPI, good or bad. But that's what I don't like that we're seeing with a lot of data right now, is that we get data and we base our ideas off of the data, right? And when we see CPI or PPI numbers and they come in and we go, oh, inflation's cooling, or oh, inflation's hot. But then they come back and 2 or 3 weeks later and be like, oh yeah, that's wrong. It's actually 50%, better or worse, whatever it may be. It makes it very hard for you to look at the market and get a better idea of how things are moving. So don't feel frustrated if you feel like that. I feel like that sometimes. So that's something you want to keep in the back of your head as we head forward into this all-time high area on the market, where we're starting to finally, as we looked at on the 1 hour chart, starting to finally see some aspect, I should say, of resistance coming into play here. Now, again, if the bulls can push through the 644.15 area specifically, that could be a sign of the bulls stepping in and really pushing here, but they got to get volume and they got to push hard, and that probably has to happen today. Just judging on the 1 hour and the 30-minute chart, it really kind of has to happen today. You can even notice here, this purple line on my chart is my 50 MA, which is it's a really good mix if you're looking at anything less than like the daily or the weekly. If I'm looking at the daily, the weekly, or the monthly, I like to look at the 200 for more of a long-term support rejection area, just in general. But I also like the 50 MA on the, I like to call them medium-term time frames. So your 30-minute, your 1 hour, and your 4 hour. And ironically, on the 30-minute, that purple line right here, I'll zoom in a little bit, it's right up there. On the 1 hour, it's right there. And on the 4 hour, it's actually underneath. But on the 1 hour and the 30-minute, we both see an interaction right here at the 644.15 area. That's almost exactly where it is. So in the event that we go up there, that could be a decent area of resistance on the day for the SPY. So we'll see here. Now, I know price action looks a little wonky here, but to put things in perspective, we've not even moved $1 on the day thus far since the open, which is interesting to see because it's been 6 hours, or sorry, 6 hours, 6 minutes, 6 hours, 6 minutes into the open, and we haven't gone anywhere yet. And whenever we open between LOIs, so when I give you guys these levels here on my chart, whenever we open between LOIs that are very tight together, that tends, and depending on other technical factors, that tends to give you a choppy-ish environment. On top of that, how were the 30-minute and the 1 hour looking, I'm leaning today bearish neutral, where I don't really want to grab the long. In fact, I want to grab the short unless the bulls can step in, because that's where I think the opportunity is actually going to be today for the market. So we'll wait and see how that rolls out. Let's take a look around the market right now and see how things are looking. Now, today is a big money Monday where I like to highlight some opportunities in the market for you guys. I think what I'm going to do instead is actually highlight a risk plan, something that I think is going to give you guys a lot more value actually. And it's basically what I'm looking at here in the interim, in the near term future, and into the end of the year. And I think that information is going to benefit you much more than me highlighting a stock or two that I like, that has some near term potential, because if the market moves the way I think it could move, you actually might get stopped out of those positions. It might be a little unfavorable, especially if you're someone who's more of an investor. I know everyone who watches the show isn't necessarily a day trader or swing trader, and I know I've got some people who watch the show that are more of like a long-term investor. So I want to highlight, and I want to especially touch on all aspects of trading if I can. And I think today that's what I'm going to focus on, because the big money opportunity that I've already highlighted in that previous video, which you can watch, and I'll highlight it again in today's live stream, that opportunity is a way to build wealth and longer term gains versus chasing the dragon with like a day trade and trying to aggressively short or aggressively long the market when we're in an area of potentially a risk off spot right now. And you could get chopped up if you don't understand how to play, especially if you're using options, if you don't understand your Greeks and what to read on an options chain. I had 1 or 2 losses last week personally where the trade ended up working out and going in my favor, but because I didn't get in with a pristine entry where I should have been a little bit more patient, I ended up eating a loss. So no one's infallible to the environment. You have to be a little bit smarter than that. So it's more about making sure that you size correctly and you're patient, because the bigger opportunity is coming, at least in my opinion. With that being said, let's zoom around and see how our sectors are performing on this September OPEX and see how we are looking. Right now, utilities are up a little bit here in the market open. Energy down about 1%, selling off very hard into the open here, as we can see on my chart. Staples pretty flat. Tech is trying to put in a little bit of a rally, open down on the day. Now green, trying to push up here from Friday's close as it seems. Real estate, this is the one you're going to want to watch this week. XLRE down a little bit, but you do have a lot of catalysts that could affect the XLRE today, as well as materials currently pretty flat. So it's good to see these two sectors are flat right now, but we could see data come through to affect specifically these two sectors this week, so make sure you have an eye on these two sectors this week specifically. Industrial is pretty flat on the day. Healthcare moving down to the open, coming back to green/flat on the day. Nothing crazy there. Financial is pretty flat. Put in a red day on Friday, and it's really been trying to break out above this basically 5350 area, where, if I'm not mistaken, that would put it at a new all-time high for the XLF. So banks are trying to put in a rally, but it's getting rejected almost every single time here. It's actually, I was pretty bullish on banks, looking like we were going to get a harder move here. It's getting a little questionable now, so I'm going to want to watch the XLF and see how things work out here in the next week or two. Consumer discretionary, pretty flat on the day, and comm services down about 7%. So your weak sectors today looking like energy and your comm services, where your strength currently is debatable. Tech, growth, right? This is a good sign if you're a risk-on investor, where we see our weaker sectors. I mean, you have a non-performer here with the staples. You've got a red XLE and marginally performing utilities with a trying to perform tech. So if you're a risk-on investor, you think the market's very bullish right now and you want to take that stab, take that risk, you want to watch and see if XLK can get a continued breakout here. I personally would not take that bet, but you can do whatever you like. Let's go back to the market here. Well, if you've been listening to the show from the open, hopefully you protected yourself from some losses, unless you were aggressively scalping, because either which way, whether you were a bull or a bear, you were getting chopped up in this open. Again, unless you were scalping, the range on the day for the market is pitiful so far. What's this? What's the low here? 69 cents? 70 cents on the day, roughly, is our range so far on SPY. So let me give you this little PSA, right? Start of a week, you tend to want to be risk off, especially if you're like a day trader. Unless it's a really, really pristine setup, you want to be more risk off on the open. Think about it this way. When the market moves every single day, we have we have things that happen, right? We have news events that happen overnight, global events, macro events, things just happen, right? But the market opens the next day and it can digest that information. When we have a weekend or a holiday weekend, we have multiple days of information that hasn't been digested. Now, of course, people can trade the pre-market, trade futures, etc. But in general, a lot of companies, so like other companies, not necessarily the SPY, but we're looking at actual companies like NVIDIA, like the Mag 7, right? People are trapped in their positions, so to speak. They can't really do much. They can at the pre-market on Monday, but outside of that, they can't really do too much in a future session, right? They can hedge with like contracts, futures contracts on ES or whatever, but they can't do much else. So that's why you kind of want to wait till Monday to see how people are closing and opening new positions. Now, again, I want to reiterate, especially on a new OPEX, there tends to be more indecision, which is kind of what we're seeing here. On top of all of those things that I just mentioned, we're between these two key levels here on the SPY, where we're just going to ping pong around for a little bit here. So it doesn't really make me confident as a bull or as a bear, but what it makes me confident to be is risk off. And again, I'll reiterate, I know I sound like a broken record a little bit, but for those of you who have been watching, I hope this, when I say these things over and over and over, just bangs in your head. There's times to be risk on, there's times to be risk off. And open on a Monday OPEX, a new OPEX, is a time to be risk off and be patient. You should rather be looking for the opportunity to consider where to long or where to short than aggressively looking to long and short the market in general on a new OPEX month, because everyone else is moving their money around trying to position. So what makes you think that whatever technical indicator you're using is going to be as reliable? Probably isn't, but what is going to be reliable is volume and time. And that's how these levels are determined. They're determined by volume, they're determined by time, they're determined by how price interacts at these levels. And that's why we're kind of trapped here right now. It's where the liquidity is. We are at a point of where there is liquidity in the market right now. And we'll zoom out a little bit. There's the most liquidity is in that zone. So this is your volume profile on the side here. So that determines volume by price, different than the volume that's down here that determines volume by time. And when you combine the two, you get a good idea of where people are buying and selling. You've got a good volume shelf right down here. So see how this blue bar is here? You got a decent amount of volume traded right around basically where we are, 640, 330-ish, right? And you have a bigger amount of volume, or also known as the POC, the point of control, where the most volume is in this time frame of what we're looking at on my chart here at 644.05. So where all this volume is, there's a lot of liquidity. So where people are willing to buy and sell, where they've opened new longs, opened new shorts, and until something gives either which way, you're not really going to have follow through. Either which way, right? So as someone who's a day trader and a swing trader, I want to wait because I would rather wait to see who breaks first, right? I don't want to bet on the bulls being right or the bears being right. I'd rather wait for the opportunity to then see who is right, then take the position. And I think that's something that is frowned upon a lot with traders, that they're not willing to be patient. And that's why I always say trading is kind of like fishing. You want to throw out your lure and be patient. You want to wait. You want to say, here's my trade plan. If this, then this. Because when you set up an if this, then this plan, you don't allow yourself to FOMO into trades. You don't allow yourself to be reckless. You say, if this level taps, I will look for this response. So, as I said from the beginning, if this level taps, depending on volume, depending on price, depending on how technicals look, I will consider a short. It doesn't mean I'm going to short right away. It could blow right through it. And I'd be dumb if I just open a short when it just taps it. But if we go up here, we dance around here, then we mark up again, and we dance around here, and it starts to look weak, then it would be a smart opportunity to take a short. Especially if you're shorting. You want to be more cautious as a bear than you do as a bull. I've mentioned this before, but when people are bearish, you have to be more correct than a bull. Bulls always have the wind at their back. The market's built to go up, right? Bears, in order to be a bear, traditionally, you have to borrow shares, which means you're a margin. So not only are you betting things go down, but you can actually lose more than 100% of your position, theoretically, right? So you have to bet on margin, which involves short squeezing. So if the market reverted, and I'm not saying people are short the market a ridiculous amount that would cause a short squeeze or anything, but if whatever position you're in reverts, then you're actually more at risk than a bull would be theoretically. Because a bull can stay long forever, a short cannot. So even if you're buying calls and puts, it doesn't matter. As a bear, there is an additional headwind that you have that bulls just simply don't have. And it's just that simple. All right, so far we tapped the 643.70 area. We went a penny or two above it, and we're rejecting so far. Still, to put this in perspective, just because the chart looks a little funky here, we're still under $1. Wait, we're almost at $1 range on the day on the SPY. We're not really too much of anywhere yet. Low a day is at 642.80. We're at 643.74, almost to 80s. We're almost at $1 on the day in terms of range. Let's look at our VIX real quick. VVIX, UVXY. UVXY is pretty stagnant down here. I mentioned last week how you want to watch the VIX around 14. Basically, like, the VIX doesn't want to be under 15 while Trump's in office. I know it sounds silly, but if you look at your VIX chart, ever since he took office, the VIX tends to stay above 15. So where we're sitting right now, and even though we have a red daily candle so far on the VIX, because we opened up higher, moving down for now, keep in mind that the VIX sub 15, you might want to be a little bit more careful, because the market tends to revert to the upside, at least during this presidential term so far. We see the VIX doesn't really like being under 15. So you want to keep that in the back of your head. We've now hit officially $1 move from peak to trove today. That's about it. Pretty dull day thus far. IWM got a nice little rally here, sitting on that 227.75 LOI. If that cracks, you could get a shot again at that 229.42. I don't want that to happen. We will talk about that in a little bit here, probably in like 2 or 3 minutes, actually. We'll talk about that and my near-term thesis for the market, as well as my long-term thesis for the market. Look at the Qs here on the 5. Getting squeezed under the 200 MA. You have what I like to call a sandwich here, when you have a longer-term MA and short-term EMAs pressing against each other. And you tend to get a hard break either way. Some of you like pendants, right? When you do your TA, you look at pendants. I prefer looking at your short-term and your long-term EMAs in a similar respect, where longer-term price action in this case is serving as a resistance and shorter-term price action is acting as a support. And you're getting what I call a sandwich, when they're getting pinched and pinched and pinched and pinched, and eventually you get a break. Whoever crosses over which way is to be seen, but that's another sign that I personally take to be risk off unless I've already have a position. So in this case, let's pretend I've been long from the open or short from the top, either which way. Unless I already have a position where I can at least manage my risk, move a stop on, etc., where I can take advantage of if it breaks in my favor versus not. So that's something you want to keep an eye on with the Qs. SPY rejected that high a day pretty harshly, now moving back down. this is the kind of open where people just get demolished. I'm telling you, this is the kind of open where retail traders going hot on a Monday morning, they throw everything at the wall, and they lose it all. And hopefully, if you're listening, you didn't throw everything on the wall on a Monday morning, and hopefully you didn't lose it all. It's not a new OPEX you never want to go hard in the paint on. Certain opens you want to go really, really hard. They're there and they make sense. A lot of the times you don't want to. NVIDIA getting near that 183.30 area. I'm pretty confident NVIDIA's not going to be able to sustain basically this range. Like up here, it has a very, very hard time. That's a huge sticking point. Look at this. This is the 4-hour chart. I'll turn the extended hours off. This is the 4-hour chart for NVIDIA. And that's why I have this LOI up here. 1 tap, 2 tap, 3 tap, 4 tap, 5 tap, 6 tap, 7 tap, 8 tap, 9 tap, 11 taps of 183.30. Can't crack it. So that is, if you like shorting, that's a good spot to take a decent short with a tight stop, because as you continue to tap a resistance level, it tends to weaken it. So you could have a hard breakthrough and pop to the upside, but if it continues to reject, or even if you see cases like this where we actually reject early prior to it, that could actually be a sign of bears actually being more aggressive on the underlying name, in this case NVIDIA, willing to push it lower even before that support resistance area is tapped. Meta failing that 775 area that I highlighted to you guys, in that 770-ish area, and 777. Way under right now, shooting down about 3% on the day. Decent weaknesses. Have news. AI garbage, blah, blah, blah. Mark Zuckerberg, blah, blah, blah. Okay, nothing that's like really standing out as like big bear news, but down about 3% on the day is not too great. Microsoft, being the kid in the corner sniffing glue as it has been, and will continue to be, actually broke the daily SAR on Friday. Now is sitting on the 21 EMA. If this gives, you're more than likely going to get back to 500 pretty quick. Yep, that's it. You're going to get to 500 pretty quick. Those are my full thoughts. You also have Google up here, which is getting a little weak. Like I said, Google is your canary in the coal mine, so to speak, for your big tech, for your Mag 7. It has been the strength. It has been the sign that the bulls are trying to step up in tech. However, you're getting to the point where you almost got a double top on it. All-time high on Google, 206.56. That's Google with an L, because there's also Goog. 206.56. We basically hit that Friday, a few pennies off. Obviously, some selling, some indecision. After that's to be expected. If Google comes back down, that could spell bad news here, at least from a sentiment point of view, for your big tech heading into pre-earnings for NVIDIA. And Apple, as it sits right now, it wouldn't shock me that we get back to these two LOIs down here, essentially the 227, low 227s, high 226s, getting some sort of reprieve after this big bull move here. Would make a lot of sense. Worst case scenario, Apple should come down to like 224 near term. And then if that happens, if you're in this 224 area, between 224 and 220, if the bulls don't bounce it, you're going to get all the way back down here. But I don't really see that as a possibility near term. Realistically, I see it needing to cool. So a move down to the high 226 would actually be a healthy move. If the bears push it, getting into this range down here would be a more likely scenario, in my opinion. You guys know how I feel about Tesla. I don't want to keep talking about it. There's nothing to see there. Amazon, kind of a similar story here. We're going to talk about this in a second here when I get into my longer term outlook here. But Amazon's another one of these companies you want to keep an eye on here near term. And I'll tell you why momentarily. Guys, I like to tell you twice every stream. This is the second time I'll ask. Do me a quick favor if you haven't already. Like the stream wherever you are, whatever social media platform you're on. Again, I only do this twice a stream, so please do me a favor. Interact with the stream. Helps me very much. I appreciate your eyes and your ears picking to listen to me today of all days on your new September OPEX day. And I hope you're enjoying the program thus far. If you haven't already, please pop over to my YouTube channel. Hit subscribe once we get to 500 subscribers. This will be an everyday show, so if you like the show and you want to see more of it, please do me a favor and subscribe over there. And don't forget, you can always say hi in the chat. I typically say hi back or ask questions. That's why I'm here. I wish you guys would ask more questions. I love interacting with you guys. There's certain days where you guys are chock full of questions. Other days you want to be quiet. I know a lot of you work. You might pop me in your pocket, pop headphones on, doing your thing. You just want to listen. Totally cool. Either way, I just want to give you guys the best show possible, and I appreciate any sort of interactions you have with me on this stream. Okay, we're going to get into our Big Money Monday segment, and that's going to be the big money opportunity. We talked about it. I made a video on it. And now that some time has elapsed, I want to touch back on it just a bit. I'm going to give a little bit of preface here before we get into it. And I'll also record it that way if you want to go back and listen or watch it. Or I can go back on social media and be like, see, I told you so, like everyone likes to do on social media. But I'll give you a little bit of a preface here. The market's sitting in a very interesting spot. And I'm going to go over this again, but I'm just giving you guys a little bit of a forward mention. The market's at an interesting spot, sitting at all-time highs, while small caps and the Dow in general actually show room for a potential another leg up. The way tech is still sitting pretty hot and sitting near all-time highs. So we could actually see a bit of movement out of tech into some of these other opportunities, or tech staying at least defensive stagnant, while more money is pumped into these other companies that have been really lagging the market overall. You got to keep in mind, even though we're at all-time highs in the SPY, that is 35% of that all-time high ability is attributed to 7 companies, right? Is it just the Mag 7? It might be maybe 10, something like that. But 1/3, essentially, maybe a little bit more than 1/3, of the performance of the SPY right now is attributed to the number of companies I can count on my 2 hands. It's a little bit of a wild thought when you really think about it, isn't it? Because it's the S&P 500. So you're saying 490 of the other companies are basically lagging comparatively. Now, that could lead to an interesting opportunity, and that actually could be the juice to another leg up in the market overall. And that's what we're going to talk about today. I also want to touch on, as I alluded to previously in the show, Target's earnings and Walmart's earnings, which are both this week, because those two things are going to give us an idea of how strong the consumer is outside of government available data. And why I say that's important is mainly due to the fact, my voice cracked a little. It's mainly due to the fact that SPY dropping here on the LOI break. Mainly due to the fact that we've seen revisions on CPI, on PPI, on job data, and who's to say what's there to be believed, right? Now, obviously, companies can lie, right? Companies can put out false reports, but the SEC is going to be all over them. Because you would think that the government would have a fiduciary responsibility, but they don't. Who does have a fiduciary responsibility to their shareholders are public companies. They have to, in good faith, report correct accounting data to the best of their knowledge with the correct information, right? That is part of the responsibility of being a public company. Which is part of the reason I'm very interested in how Target and Walmart will perform, because in a sense, I think that's going to give me more reliable data on how strong or how weak the consumer is versus CPI, versus PPI, versus basically any other government jobless data, whatever, because every other month we come out and we're revising data. But it's not even a small revision, it's a big revision. So who's to say what's true? The government doesn't have a fiduciary responsibility to provide accurate data, but public companies do. So hopefully that gave you a little bit of thought before we head into this little segment here. Again, I wanted to give you a little bit of forward before I get into everything. That way you guys are more mentally prepared with where my head's going with this. Let's go out on the daily here in SPY. I should probably erase all of my thousands of lines or hide them for now. All right, actually, real quick, guys, hang on. I'm going to get some water because I'm already very parched. I'm going to put on a little bit of elevator music for you guys. A little bit of high energy to get you hyped up a little bit for this next segment, or as high as I can get it. As high as I can, copyright free get it. And I will be right back. Just want to make sure I can speak fluently for this next segment. the royalty-free tune. A little bit of royalty-free action for it. Not too bad, right? Not too bad. I'm thinking about, I don't know, you guys could let me know in the chat if you'd like it, but I'm thinking about pumping through some like low tunes throughout the day. Like as we talk on the show, getting some music in the background just to kind of round it out, make a nice little, keep the energy up, right? So let me know if you'd like that. Anyway, let's get into it. So right now, where the market's sitting is a very interesting spot. Now, recently I put out a video in regards to why I think the SPY will be going to around $700, but this is why I think it's not getting there without a pit stop first. How the market's sitting right now, we're at all-time highs, and I want to give you guys a few things to consider before we get to that penultimate price target. I'm going to restart. Didn't like that. I want to say the same thing, but restart it. Because I'm recording this for you guys, so you can go back and listen to it. Toby said that definitely pumped up my energy. Let's go, Toby. Let's go. All right, so the SPY is sitting in a very interesting spot right now, and I have a personal video I put out there that I have my price target for the end of the year for SPY to hit $700 a share, but I don't think it's going to get there without a stark pit stop first. And that pit stop is going to be a little bit lower than we currently are. In fact, it's actually going to be an official correction on the market, and I'm going to tell you why I think that is in this video. So currently we have the SPY controlled. It's all-time high. The number that we got there, it's controlled by essentially a handful of companies I can count on my two hands, and those companies control 35% of the SPY's overall value, right? The other thing I want you guys to keep in mind with those companies is that there are other companies that are lagging the market. Look at the Dow, you could look at IWM, where that is where the opportunity that I'm looking for this next leg up to really come into action. However, I don't think that's going to happen just yet without a correction down to a specific area that I already highlighted on a previous video, but I'll highlight to you guys right now, once again, around 610.78, and in the worst case scenario, getting down to 581.70. Now that sounds like a crazy prediction, right? And I'm actually saying, and I'm theorizing this to happen before the end of September. So I'm actually predicting a harsh fall within a 6-week period as of this recording. It's a little dark, right? It's a little scary, but I'm going to tell you why I think that is. Now, first thing I want to start you with is NVIDIA. NVIDIA reports earnings as of this recording of this video next Wednesday. And since their last earnings report, they have occurred 50 more points on their stock. They are now up at this 182 area. I think NVIDIA is going to actually beat earnings. I think they're going to do phenomenal during their earnings. However, as a stock appreciates, and this is already wildly overvalued by every metric, right? But it is the canary in the coal mine. It is the leader of AI, the bastion of innovation for the future of the stock market. And as that carries this heavy weight on its back, and as it appreciates in value, and as it continues to go up, so do the expectations. When NVIDIA reports their earnings and the results are not as sensational as they should be, then we could actually see a stark fall on NVIDIA. And I know that's not really anything crazy. People have been wanting NVIDIA's stock price to drop $100 every single day, right? Everyone says it's overvalued, whatever. That's not the point I'm trying to make. The point I'm trying to make is earnings for NVIDIA, they'll say they're expecting 10. All right, I'm going to use arbitrary numbers here. They're expecting 10, just the number 10, right? They report 15, right? That's 50% beat. Fantastic. But the market, because of where it's valued at, may be thinking it needs to report 20. So because it didn't report 20, you may have a lot of people going, well, I don't get it. NVIDIA's going down. They beat by 50%, whatever. And the stock's plummeting. It's plummeting because it's evaluated so highly. And that's why it will get a bit of a retracement. At least I'm theorizing that this earnings report will be good on the books. The numbers will look good. But if NVIDIA does not retrace prior to their earnings, and they're running out of time to do that, there will be a red earnings for NVIDIA. Now, that's predicting a binary event, right? That's like predicting the future. Who knows what would actually happen? Maybe they do blow it out of the water. Maybe they ultra blow it out of the water, right? Going back to the 10-20 example, maybe they report 50 and they were expecting 10, right? So maybe they really kill it and it pops off even more. The market gets the next leg up. Well, then maybe my theory is a little bit invalidated. But I want you to look at the overall picture, how we're sitting here. I highlighted how on specifically the SPY, how important a monthly SAR break is. And this is in the previous video, so I'm just going to lightly touch on it. The SAR indicator stands for stop and reverse. It's an indicator that works on the parabolic nature of the stock market. When a SAR bubble breaks, you tend to get a reversion to the other direction. So if a red bubble breaks, you tend to get a green move. If green bubble breaks, you tend to get a red move. It's not always just like that, but keep things simple. On the monthly chart, every single time, you can go back and fact check me if you don't believe me, every single time a red bubble has broken, there's been at least, and we're going back to like the year 2000. So, I mean, the numbers obviously get smaller as you go because the SPY is worth less as you go back in time, but there's been at least about a 70-point appreciation from that red bubble break to the upside. However, I believe it was, and I counted, it's 9 out of 10 times, the move gets back tested first before getting a move to the upside. Meaning, when the red bubble breaks, and you can use 2023 as an example here, you had a quick period of green months, so green, 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 and then you had 3 red months that actually back tested where that bubble was before getting the actual move, the continued move to the upside that we're seeing here. So that's part of, from at least a technical perspective, what I'm looking for here on the SPY to get a bit of a back trace before getting a harder rally to that 700 number or above. More importantly is the IWM. Now, personally, I believe the IWM is set up for a hard rally. It's been lagging the market, like I said at the beginning of this video. So has the Dow. And once it gets over, sustains over this 229.42 area, it has a clean move to 242.39, about 10 points. So pretty good move, right? At least in my opinion. And we saw an attempt at that move, but it gapped down the next day. Didn't really follow through. Kind of cooling right now. I actually don't want to see this move take off before September FOMC. Here's why. This move that we see here, these 2 candles here, were perpetuated by the fact that the market was pricing in almost a 100% guarantee that rates were going to be cut in September. What does this mean? Well, when rates get cut, it means the prime rate goes down. When the prime rate goes down, it's cheaper to borrow money. When it's cheaper to borrow money, companies can refinance. They can also borrow money for cheaper. And those companies that are borrowing money tend to not make a lot of money, right? Especially small caps, IWM, the Russell 2000. So those small cap companies tend to get a boost because now they can refinance debt. They can borrow more money. They're not at risk of going bankrupt as quickly, theoretically, right? So they're able to get more money, get more liquidity, have the ability to turn from a growth company to a real company, have the ability to go from being in debt to being profitable eventually. So as those rates come down, you tend to see a bullish reaction. However, and you can go back and fact check me on this too, when the Fed prime rate cuts, there tends to be a sharp bullish reaction in the market. Market goes up, and then eventually we enter a bear market. And I talked about this in the previous video, so I'm not going to go over why and everything, but eventually we go into a bear market, and eventually being relative, but 2 to 3 months out after that cut, tend to get a bear market move. And bear market by definition, 20% or less, or more of a retracement. I'm concerned because we already saw about a 3% day in the IWM and then a continuation the next day on this prediction that Fed or the futures traders were looking at basically guaranteeing a cut. So if we're already front running that cut, that could actually be concerning because what I'm looking at is IWM to actually be part of that fuel to spike the rally in the SPY overall in terms of sentiment. So what we then saw was PPI come in, and that kind of reversed the move a little bit because PPI came in a little bit worse than expected. Consequently, traders backed off of that guarantee of a cut just a little bit. If you are a bull and if we want to see the setup that I want to see take place, I don't want to see us actually break and sustain over that 229.42 on IWM yet. That is what I want to see and wait until September because I actually want to see this come down with the overall market into that FOMC meeting, into that time where the market's kind of topping out here a little bit. And if IWM can get bearish here for the near term, that's actually going to set you up better for the long term as we looked at SPY on the monthly chart. As we said, once that retest happens, after a month or two after that SAR bubble breaks, you tend to get a much harder rally. And the timeline all adds up. Now, I personally am not a huge believer, and I want to say believer, but I don't really use seasonality that much. But I know a lot of traders do. And there are certain reasons why there's seasonality. The reason I don't like it is I believe it bakes in some sort of bias. Obviously, certain events can happen at any time of the year to cause what is normally a bull time or normally a bear time to be the opposite, right? But if we take seasonality with a grain of salt here into the mix, there tends to be some weakness around this time before getting some strength into our Santa rally at the end of the year. So in a perfect world, here's your weather forecast for SPY to 700. We see SPY take a dip, a haircut here of somewhere between 6 to 12%, roughly. Just eyeballing. Again, that 610 area all the way down to 570 realistically is where I'm looking for a back test. I'm predicting, or I want to see that happen between now and the FOMC meeting. So we roughly have about a month between now and then. Obviously, the FOMC meeting could affect that either which way. In a perfect world, IWM during that time does not break 229.42, or I should say have a sustained break above 229.42, and in fact kind of bounces around in a perfect world north of 217. So a little bit of a retracement on IWM, not a ton of weakness, and I should say not as much weakness as the SPY, ironically, but enough where it's still floating up in this area. I feel like a lot of the weakness is actually going to come out of your Mag 7. NVIDIA could be a catalyst to that, right? So I'm looking at the cues to drive the weakness in the SPY, to drive that bear pullback, that short-term correction. The FOMC meeting, I'm theorizing if it is a cut, and assuming the IWM stays down, right, we don't get that break prior, that, and we're not front-running that rate cut, right? There's not news that the Fed's definitely cutting rates and everything, or maybe we're going to cut 50 basis points or 75 basis points. We don't get too much excitement until the meeting. That would be part of the catalyst for a continued leg up on the IWM and even on the Dow. That would give me the time, or basically if the timing lines up perfectly, to where I'd look to take a long into end of the year. Basically a Santa rally, just a long-term Santa rally from mid-September to the start of October to end of the year. Now, it may not be a straight line up, but when we're talking monthly charts here, and let me get my doodles out of the way, you know, something like this where you have a few green candles up, red one down, etc. That's what I'm looking at here for the overall market. Now, I do want to touch on one more thing for you guys before I let you go here, and that is how we have Walmart and Target's earnings this week. We have CPI, PPI data, jobless data, all this other data that comes from our government, and unfortunately, our government has the ability to change this data. They can report the data and come back a week later and be like, oh, we messed up. It's actually... it's better, it's worse, it's whatever. But it's not true, right? It's not exactly what it is. And the government doesn't necessarily have a fiduciary responsibility to you or me. They don't care, right? They can make a boo-boo and whatever. Walmart and Target can't really do that. Of course they can, but they have the SEC watching over them, so government body, and they have a requirement as a public company to have a fiduciary responsibility to report the most accurate information to the best of their abilities to their constituents, their shareholders, on what they see. Target reports, I believe, tomorrow on Tuesday, and Walmart believes reports on Thursday morning. These reports are going to give us an idea on how strong or weak the consumer actually is. So in a perfect world, for this trade to work out, and again, this is a once in a every 2 to 5 year trade opportunity here on the SPY. I actually want Walmart and Target to have weak earnings. I want the consumer to be weak. I want there to be more fear to come into the market. I want NVIDIA to miss. I want these things to really tear on confidence as we sit around all-time highs on the SPY. Now, I'm not trying to stoke fear or be a bear necessarily, but you need to understand that my bearish perspective here is the opportunity to be a bull. I don't want to open a long up here at 643. I want to open a long anywhere from 570 to 610. I want a better bull position so I can get that target, that 700 price target that I want to see by the end of the year. But for that to happen, I want a better opportunity. I want a pullback. I want a correction. When everyone's terrified, when everyone's fearful, when these things, if they do happen, when all these things happen, when the VIX spikes up on some fear, we see some harsh down days. I mean, you can even look at when we had this move at the end of August We were trading at 640 overnight, or within 2 days. We were down at 619. What is the low on this? 619.29. The high on this candle was 639.85. So you lost 20 points within 2 sessions. So when I put it like that, when you think about it, is it really too far-fetched to think that the market could get to 610? We already got 619. Is 610 that very first area where I want to start dipping my toes in? Is that crazy? Now 570 is a little bit more of a drawdown, of course, but that's the bottom line, right? That's the lowest. And if you even want to go even further, I don't think you're going to get lower than the 200 MA on the daily. That's 588.96 right now. So really 570 is like a stretch. All things go to hell. Everything's really, really bad. That also gives you the opportunity, like worst case scenario, 565.83, the gap to fill here. You could wick it on the day and come back up. These are like worst case scenarios near term here, but I don't think that's going to happen. Realistically, you're going to get 610, 610 at the most conservative bull estimate, right? 600 to 590 is very likely still. And then if there's tons of fear, that 565, 570 area. But either which way, if you're dipping your toes in, you're buying leaps, even if you want to buy shares of SPY, whatever you're doing, the opportunity for a longer term wealth generating trade will be here on the market. You just have to be patient and watch for all the key things that I pointed out in this video. Let me know what you think down below. What do we think, guys? What do we think of my master plan here if it comes to fruition? For context, we have something in our community exclusive trading called the Seed to Tree program, and it's me managing like a small portfolio. That portfolio is sitting currently at 45% cash right now. To be a little bit more defensive, to potentially take advantage of a move just like this to grow that small account aggressively, just so you guys are aware. I think there's going to be great opportunity here if you're patient. And as I said at the start of the day, you ain't missing much today. If you're running around with your head chopped off, you're going to have a bad day today. It's not going to be a fun day to trade. I'm just telling you straight up. Starts of the month tend to be choppier. And on top of that, don't forget, let me just verify, right? I'm pretty sure it's today. Yeah. The European leaders are coming to the White House midday today. So the market could be choppy until that because they don't know if Trump's going to say anything about China or Russia or Zelensky or Ukraine or who knows what's going to say. Tariffs, like all of that. So the market could just chop until that time. But what do we think of my longer term outlook here? So near term bearish here until, like I said, mid-September, end of September. Then flip bull medium term until the end of the year, targeting around like 700 or more on SPY, but ultimately 700 is more of a conservative goal because once we've cooled off from there, it's a big psychological level and it wouldn't shock me, honestly. Oh man, I can never say your name. Tencion. I agree with it generally. I think the index is going to have a complex correction and shop around before SPX heads to 7,450 by end of year. Cool. We're on the same page. Yeah. Complex is a good way to put it. And that's kind of why I wanted to touch on, when I made that little video, I wanted to touch on these 2 days here at the end of August. I don't think people get too cushy when the market just kind of ticks up. They don't realize that a correction can happen like that. This was a 20-point move on the SPY. Let's go back to tariff time. So tariff time, I'll use this candle here just for the extreme example. SPY at the high of this candle was 565. 1, 2, 3 days later, it reached its low of 480. You lost almost 100 points on the SPY in 3 days. Now, granted, you recovered a big amount pretty quick. It was volatile. The point I'm trying to say is it's not insane when I'm saying a bear move to drop this $70. Not crazy. Really is not. Because bear moves tend to be sharp. They tend to be quick. They tend to be volatile. They tend to be scary, right? Bull moves tend to be a little bit more, I like to use the word plotting, steady. Bulls, longer term, just kind of tick up. It's the escalator versus the elevator. I like to say, bears are always elevator down. Uh, bulls are escalator up. Stairs, right? Bulls climb stairs. Bears take elevators. Drop. Pretty aggressive drop. Drop. Bull. Dun ba dun ba dum. Tiny drop. Dun 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 dun. Like a roller coaster ticking up before the drop. That's what it is. So I'm pretty confident this is going to happen. I've got a lot of money sidelined right now. Because here's the thing, even though I'm wrong, if this doesn't happen, let's hear inverse story, right? Inverse of what I said. Nvidia blows out of the water. They go north of 200. Target and Walmart, consumers very strong, blows it out of the water. Fed cuts by, or I should say, IWM rockets before the cut goes off, right? Cool. And then also the Fed cuts and IWM still goes higher, right? I could be wrong and I might miss out with the larger chunk of my money. But, and this is the important thing, we're identifying risk on versus risk off environments. And it's not necessarily being greedy waiting for your price to buy. What I mean by that is, if I think that the value of SPY is less than it currently is, I want to wait till it's a value that I want to buy it at. If you want to buy a PlayStation 5 and it's on the market for $600 and you go, I'm going to wait till it's $500 or $400, then I'll buy. And a sale comes up, a Black Friday sale or whatever, and it comes up, you're cool, it's the price I want, I'm going to buy it. It's the same kind of thing with stocks. And I think because we trade them, we look at them so frequently, a lot of people forget that when you're buying an equity, you're not, and it's mainly because it's electronic, right? We don't have physical paper. You're not taking something off of a shelf, putting it in a cart, and giving someone dollar bills, right? You lose that tangibility of it. So it just seems like some people, a lot of the time, want to rush and trade because they think things are going to continue to go up and up and up and up. And for the market to behave correctly, having corrections in the market actually allow it to self-regulate. Having those harsh drawdowns, having people sell, having people put out all their money that are on the sideline, like people like me that are waiting for that pullback to load in money. These are all the things you want to keep an eye on because those are the people that are going to help stair-step the market even higher. The people who are patient. Because those are, again, the investors are what run the market long term. And if you don't believe me, really simple exercise, click the month part on your calendar and then zoom out and look at the S&P 500. The investors win every single time. The traders can win, but every single time there's been a harsh correction. Here's your financial crisis. Here's COVID. Here's the tariff BS. Every single time there is a harsh correction in the market eventually rights itself and goes to the upside because it gives the opportunity for liquidity to leave the market because people are bullish from here. They go up to here or all the way up to here. Who knows? They get a dip, they get out of the market and they get back in. Or new people come into the market and we rally it again. It's the same story over and over and over and over. It's just a matter of how strongly do you believe in the value of SPY where it is right now? And that's something you got to ask yourself. You may disagree, but because of where volatility is sitting, because of all the things I just said in that video, the market is ready for a pullback with a spike in volatility, shake some people out of the tree here, get some people scared. And when that happens, I'm going to be personally ready on the sidelines. Toby says, I'm very unsure of how the market's going to correct, mainly due to the money printing. I'm watching volatility look to see where we reverse. So that's the other thing. I don't love longing the market longer term. Right? I'm trying to pick my words carefully. I don't love longing the market longer term while the VIX is like really low. I'd rather buy when the VIX is high, right? It makes sense when you think about it. When there's a big disagreement in price, that's when I want to buy the SPX, the SPY, whatever your vehicle is. When there's not a big agreement, it's a different story. Now, with that being said, periods of stagnant VIX, so going sideways, tend to correlate with the market just kind of grinding up. So depending on your strategy and depending what you're looking at here, like here's a great example. Here, let's do monthly actually. There's wicks where we spike up here on the VIX, and this is why a lot of people just say short the VIX, but here's 2016, where ultimately, I mean, it got all the way down to like 10 and stayed at 10. These are monthly candles. Stayed at 10 for a few months here, and it did pop up and eventually got a big blow off relief here blow off for volatility. But like the VIX wants to stay, in general, it stays in bull conditions around like 14. Anything less than that, I get very nervous. And again, I want to reiterate, during this administration, 15 below 15 is where it gets a little nervous too. So north of 15, I feel more comfortable. Ironically, I want there to be a disagreement in price because I want there to be fear. So I want those spreads on XPX to get wide, because for it to hit where I want to buy, there needs to be a little bit more fear in the market. When I say fear, I mean disagreement in price. I want those spreads to be really wide. So that's my thought process. Anyway, guys, it's almost 10:30. We've had a great stream. As predicted, nothing has happened on the market. You probably could have taken a nap and been more productive. Currently tapping the 200 MA on the 1 minute here. As I said, my opportunity, if I want to take a short, it's going to be here at 644.15. You could do with that information what you like. I don't even know if I'll personally take it. We'll see. Depends on how things are shaping up from a technical point of view. I like it a lot, but I don't want to get in early because price action's so tight. It's not a good environment to trade 0 days, especially due to what today is. And also the catalyst that we have coming down the pike, probably around, like I said, after 1 o'clock when Trump is meeting with these European leaders and stuff. So that it might be when we see a little bit of movement here in the market. But other than that, if you do trade the market, I would approach it with the mentality of a scalper. I'd be very scalpy in this environment. I would take quick hits and get out of the way if you have to trade it. I think for most people, the most beneficial thing would be to not trade at all, or trade individual names that have some momentum here. You could trade Meta, had good downside move, play the reversal. I would just stay away from the overall market today, just because you're probably going to get pinned pretty good here. I would look for individual names. If you are going to trade today, trade those individual names that have some movement one way or the other, and or short Nvidia as it approaches 183.30. Not a horrible idea. I might actually take that short here momentarily. Anyway, I'll leave you guys with that. I hope you enjoyed the stream. Hope you have a great rest of your day. I might do another show on Wednesday. As I said prior, shows are going to be a little bit iffy here just for the near term. I'm doing a lot in my personal life right now and in the background, so I'm trying to at least come to you guys when I can, because when I do a stream, I want to be dedicated. I want to be here. I want to be locked in with you guys. I want to give you all my attention. I don't really want to do anything else or be distracted by things, so I take a lot of pride in that. I want to take a lot of pride in providing you guys good content. If you're taking your time to sit here and listen to me babble, the least I could do is at least give you my full attention, which is what I want to try to do. So I don't want to give you subpar quality. That's my goal. So stay tuned. Watch out. I'll put a post out on my YouTube channel and on my X. I'm going to shoot for Wednesday. Kind of depends how today and tomorrow go, to be honest with you. I'm going to shoot for Wednesday. If not, I might do an afternoon stream, like a power hour stream. So if you guys are interested in that, let me know either on my X or over on YouTube in the comments. Let me know if you want to see a power hour stream, which things would obviously be a little bit different than a morning stream that we have here. So anyway, I'll leave you guys with that. As you guys know, and as I like to tell you, because now it's been a while and I've got to read it again. Some say you need an extra trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time. I will see you next time.
The time has passed, and that's a wrap.